Hello everybody, welcome to JAIIB CAIIB English Medium channel. I hope that all of you are doing fine. Today in this particular session, we will be talking about the principles and practices of banking. PPB, a very important subject of JAIIB indeed, and the exam is scheduled on 8th of November. 8th November we are having the exam, and effectively if we calculate, more or less we have only 40 days left now for the examination. So how we must prepare? We must understand the basic concepts, along with that try to solve certain questions. In this particular video we will be talking about a very important concept, that is your NBFC. All of us know that the banking industry, it includes all those commercial banks, but what about certain financial companies which are non-bank in nature? Today we'll be talking about them only. So first thing first, what is the definition of NBFC and where it has been mentioned? So we will starting off with the basics. Later on we will cover the advanced version as well. So the non-banking financial company is a company registered under Companies Act 1956, engaged in the business of loans and advances. So always remember, this particular organization or this particular type of company, they are here for loans and advances. So maximum times the fresh bankers, they feel that NBFCs are here for the deposits only, but no, they are here for the loans and advances as well. NBFCs have competitive edge in their superior understanding of regional dynamics, well-developed collection system, and personalized service in the drive to expand the financial inclusion. One pertinent question which must be there in your mind, that why do we need an NBFC when we already have the banking institutions with us? So the question is relevant, but the answer is this, that they already have well-developed collection system, because they do not have any kind of, you can say, headquarters situated in the financial capital of our country, or for that matter in some other capital city. They have their roots in the semi-urban areas. They started their operation for the people residing in semi-urban areas, so they have a stronghold there. Lower transaction cost, quick decision making, customer orientation, prompt revision of service have typically differentiated the NBFCs from banks. So you will find that NBFCs, whenever we talk about these institutions, we feel that they are limited in number, but no, they have good amount of numbers when we talk about the difference between the banks and NBFCs, and the network which they have right now, it is huge as compared to the banks as well. So the most important point here is this quick decision making. Often when we take loan from, let's suppose, any private bank or public sector bank, we see that there is certain amount of time lapse there, certain amount of time is stipulated for the entire process to get completed. But in NBFCs you will find one important thing which differentiates them from the banks, that there is no deviation kind of thing, right? Always we go for a loan, supposedly home loan, we say that deviation must be there must be certain concession in the banks, but in NBFCs they hear you properly when you are approaching a particular NBFC for the loan. I'm not saying that the bankers, they do not approach, they do not entertain the customers properly, but the mindset of people, of the customers, it is like that only. Whenever we are engaged in a particular, you can say, loans and advances section, then yes, NBFCs is the more preferable one because of n number of reasons. The primary reason is this one, quick decision making. Then we have the growth of NBFCs, whether they have grown or not as an institution. So during the last decade, 9 microfinance institutions, NBFCs, MFIs, have been licensed to start a universal bank or small finance bank. So from here, you can understand that how an organic growth is ensured for the NBFCs if they are moving in the right direction. So when you talk about the NBFCs, they have the opportunity of becoming a universal bank, or for that matter, small finance bank as well. And that's the reason why NBFCs, they try to expand their business network also. One NBFC microfinance institution has merged with the commercial bank, and this is your homework. Do let me know in the comment section that what is the name of this financial institution, the latest one which has been merged with one of the commercial bank. I want name of both, the name of your commercial bank as well as the NBFC MFI. The share of NBFC MFIs in microfinance sector stands a little over 30% in terms of gross loan portfolio of 2.27 lakh crore. So it is huge, it is immense. When you talk about the percentage or the contribution provided by the NBFCs in the loan portfolio, if it stands at 30% of the actual amount of the overall amount in our country, that is a huge number. Then we talk about the categories of NBFCs. Various categories of NBFCs are there, and out of those categories, some are exempted from the registration under RBI setup, RBI regulation. So following categories of NBFCs have been exempted from the requirement of registration with RBI under the RBI Act 1934. What all NBFCs are there who do not need to have any kind of registration from RBI? Starting off with the microfinance companies, subject to certain conditions. They must have a good set of their own rules and regulation. Like there we have in our banks, we have the board policy. Na? If the microfinance companies also have some setup in line with the board policy, then they are exempted. Asset reconstruction companies which are registered with RBI. So ARCs are there. Definitely we have the ARCs for recovering the particular loan amount which has been disbursed by the NBFC, or for that matter public sector banks or private banks also. But ARCs which are already registered with RBI and they want to perform the function of a lender, they are exempted from additional registration. Securitization reconstruction of financial asset and enforcement of Security Interest Act 2002. So always remember, ARCs being the recovery agencies, they will be registered under the SARFAESI Act, SARFAESI Act of 2002, and if they are already registered, no need to have a separate you can say registration with the RBI. Then we have the Nidhi companies. Again they are exempted. Mutual benefit companies, the chit fund companies, the chit funds, they were in news back in 2000s, the early 2000s, but yes, they have been constituted under the Chit Fund Act 1982. So all these chit fund companies are also exempted from your ambit of RBI's registration. Then we have the merchant banking companies, subject to certain conditions. So in the exam, question can be around this particular information, that which of the following are exempt from the RBI's registration if they want to perform the functions of NBFCs. Fine. Next we have one important thing, that is what all activities are not eligible for bank credit. You are saying that yes, 30% is the contribution of NBFCs in the entire loan portfolio of our country, but there are certain activities which you cannot do while providing the lending amount. So bills discounted, rediscounted by the NBFCs, these activities are not eligible for the bank credit. You cannot provide credit for the bill rediscount or the bills discounting system as it is there in the scheduled commercial banks. There are certain exceptions to this, however, that banks may rediscount the bills already discounted by NBFCs arising from sale of commercial vehicles. So if a particular commercial vehicle has been sold by the NBFCs and there we have to discount the bills, NBFCs have already discounted the bill, then the respective bank can rediscount it again. Second one, the second exception, or you can say who are ineligible for the bank credit, investments of NBFCs, both current and long-term nature, in any company or entity by way of shares, debentures, etc. There are certain exceptions here also. So see, I have mentioned the exceptions in first 2 points. These exceptions are very important because examiner play around these exceptions only. Everybody knows that who all are ineligible, what all activities are ineligible while providing the bank credit by the NBFCs, but they often neglect this particular term, that what exactly is the exception in those ineligibility criteria. So always remember exceptions. You must remember that stockbroking companies may be provided need-based credit against the shares and debentures held by them as stock in trade. So certain companies are there, specifically the stockbroking companies, which can be provided. Fine, it is not an obligation on the NBFCs, let me be very clear with you, but yes, it can be done by the NBFCs. Then we have unsecured loans, intercorporate deposits by NBFCs to any company, that also is ineligible. all the types of loans advances by NBFCs to their subsidiaries, group companies or entities. So if a particular NBFC has a subsidiary and the parent NBFC is providing certain loan to the particular subsidiary, that is also not eligible under the bank credit norms. Then we have finance to NBFCs for further lending to individuals, for subscribing to IPOs and for purchase of shares from the secondary market. Again, if you are trading in the secondary market, that is not allowed for your bank credit portfolio under the NBFC's setup. Next, we have the prudential ceilings, which you must remember for the exposure of banks to NBFCs, because banks also, they tend to lend certain amount. Co-lending setup is also there between the banking you can say industry and the NBFCs. So exposure to a single NBFC, excluding your gold loan companies, it can be maximum of 20%. 20% of what? 20% of the bank's tier 1 capital. That you must remember. This 20% question has already been asked in the PPB exam. Chances are high that they can ask you again that what is the exact number when you talk about the exposure to single NBFC. Maximum it can be 20% of the bank's tier 1 capital. Otherwise, when we talk about the average, so it hovers around 10 to 12% only. Exposure to group of connected NBFCs or group of connected counterparties having NBFCs in the group, maximum is 25% of the bank's tier 1 capital. So this we must remember that maximum for this particular category is 25% only. So the exposure to group of connected NBFCs or the group of connected counterparties having NBFCs in the group, maximum tier 1 capital of the bank can be 25%. Exposure to single NBFC, which is predominantly lending against collateral of the gold jewelry. Again, see, when we talk about the first part, in the single NBFC category, the gold loan companies are excluded, completely excluded. But the exposure to single NBFC, which has predominantly lended in the collateral of your gold jewelry, they can be a part of the prudential ceiling. So that is comprising 50% or more of the financial assets. For them, maximum of 7.5% of the bank's tier 1 capital plus tier 2 capital. So tier 1 plus tier 2 capital we must know for a specific bank, and we will multiply it by 7.5%. That will be the actual amount for the exposure limit to the single NBFC, which is having gold loan predominantly in the market. Then aggregate exposure to NBFC sector. The overall exposure, banks may fix some internal limit for their aggregate exposure to all the NBFCs put together. That is up to the banks only, where they are having some co-lending setup also with the respective NBFC. Then we have aggregate exposure to all the NBFCs having gold loans to the extent of 50% or more of their total financial assets. The bank should have an internal sublimit on their aggregate exposure to all the NBFCs as well. So these 2 points, the last 2 points, they are subject to bank's own internal mechanism. But for sure, when I talk about the exposure to single NBFC, excluding the gold loan companies, exposure to single NBFC where gold loan is predominantly being given, and exposure to group of connected NBFCs, we have specific maximum amount of, you can say, tier 1 capital in the bank's exposure. Okay, so for the first category it is 20%, second it is 25%, third category it is 7.5%. okay, and the ceiling may go up to 12.5%, which is what we see in the case of your single NBFC also without the gold loan. Okay, then the banks can also extend loans to NBFCs for the purpose of on lending on the priority sectors. This mode is not applicable to RRBs, urban cooperatives, small finance bank and local area banks. So you must remember that these banks, these 4 category of banks, they cannot extend loan to the NBFCs specifically for the priority sectors. So one by one, let's see what is the norm for your NBFCs, HFCs and MFIs. So loans to loans to microfinance institutions, we talk about the societies, trusts, etc. Here the banks other than the small finance banks, they are allowed to extend credit to the registered NBFCs only. Always remember, the registered ones are those which are registered with the RBI. Okay, mentioned in the Companies Act, but registered with RBI. Then loans to NBFCs for on lending is eligible for classification in the priority sector. Loans to housing finance companies, bank credit to HFCs approved by the National Housing Bank for their refinance for on lending activities. Yes, that is also permitted under the priority sector lending. Last, we have the cap on lending. What is the cap? This particular question can be asked as a 0.5 marker. So the bank's credit to NBFCs, which includes your HFCs for on lending, should be within 5% of its total priority sector lending averaged across 4 quarters. So you must know that in the past 4 quarters, what is your exact priority sector lending as a bank, and out of that only 5% can be provided to the as a cap on the on lending activities for NBFCs. Next, we have question which is based on the MFIs only. It has been asked multiple times, and you must remember this list. MFIs which are exempted from registration. So there are certain MFIs where no registration is required. Microfinance institutions. We are not talking about NBFCs only. We are now talking about the NBFC MFIs. So there are certain MFIs which fulfill the following criteria, which are exempted from the registration with the RBI. The first one being purpose and quantum of credit. When we talk about the limits which are exempted under the head of purpose, what is the purpose and what is the actual amount of credit? So providing credit not exceeds 50,000 for a business enterprise and 1.25 lakh for a dwelling unit to any poor person. If the credit amount is more than 50,000 in case of business enterprise and more than 1.25 lakh for a dwelling unit. Dwelling unit means what? Where the people reside, to any, and you can say poor person. If it does not exceed these two limits, then you are exempted from the registration of RBI. Licensing under Section 25 of the Companies Act 1956. Section 8 of the Companies Act, you must acquire the license. So licensing is always key question or the favorite question of IIBF. Which section of Companies Act defines it? It is defined under Section 25, and also some you can say the latest Companies Act defines it under the Section 8. Then the norms for public deposit, it does not accept public deposit as defined in the RBI direction. So if we talk about the MFIs, if you want to get exempted from the RBI's registration, which is mandatory, if at all your exemption is there, it will start firstly from the public deposits only, that whether you accept the public deposits or not. If you do not accept the public deposit, then we will be looking into the purpose and quantum of loan. After that, whether you have the license as mentioned in the Section 8 of Companies Act or not. Like that, the process flow occurs. Then the prudential norms, when you talk about the capital adequacy, tier 1 and tier 2 capital to be not less than 15% of the aggregate risk weighted assets. Tier 1 capital, when we talk about it, is a part here also, but tier 2 capital should not exceed the tier 1 capital. Okay, T1 plus T2 should be less than 15%. But when I talk about the comparison between T1 and T2, then the T1 capital should always be greater than the T2 or the tier 2 capital. Then asset classification norms. For standard asset, no default in repayment of principal or payment of interest, the simple one as we see in the banks also. Non-performing asset or the NPA, we call a particular asset as a non-performing when the interest or principal payment remained overdue for a time period of 90 days or more. So simple things are there when you talk about the prudential norms also. Okay. Next, we have the prudential norms classification, how the prudential norms can be considered for certain loans where the credit guarantee fund is present, how we will be moving towards the regulatory structure, the SBR of NBFC, what is the meaning of top layer, middle layer, upper layer or base layer in the NBFCs. All these things are very important for the exam, and if you want an elaborate discussion around this particular topic, you can directly contact us on the number which is flashing right now on your screens. Else you can call us on 0981 981 9247. Directly you can contact us on this number as well. And for all of you who want to have the PDF of this particular session, you can scan this particular QR and directly you will be redirected to the virtual library where you can find the English medium PDF for all the subjects. Okay, so this was it for today's class. If you have any doubt, feel free to ask me in the comment section.